Gentlemen, thank you very much for being here with us. Malcolm, since you're just joining us, I want to give you sort of the first crack at your take on what happened here today and here this week. What do you think? Have we put the bottom end behind us now that we know with certainty what has happened with Russia and Ukraine? The invasion has happened, so at least that card has been played?
Yeah, it's really early days. I agree with what I saw Josh just got done saying, which was that it's too much going into the weekend uncertainty. The next 2 days could be very pivotal in what happens in the market. But I would just say that the last 72 hours, or maybe the last 3 trading days, let's call it, have taught us anything. It's that trying to perfectly time the markets are a fool's errand, right? If you logged into your brokerage account and decided to suddenly make changes because the market was down crazy at the open yesterday, you missed out on the swing back, and you definitely didn't jump back in at the open this morning, which means that you also missed about a 2.5% increase, coming into this close. And so, if anything, the last couple of days should have proved to people that trying to perfectly time the markets it doesn't happen that way.
Turning back to our panel now, Malcolm, I want to get your take on some of these cross currents where geopolitics are concerned, how you navigate them as an investor, especially when you are talking about the potential for cyber attacks on critical infrastructure, how the concept of critical infrastructure is changing, and then, of course, so many industries now trying to figure out the sanctions picture as well.
Yeah, so it makes it very tough to predict whether this actually is the bottom that everyone's hoping for, everyone being, traders who are looking at moving money from safe havens into the market. It makes it tough to predict that. But for context, we looked back at what happened in 2014, February, March 2014, when Russia did a similar thing to Crimea. And essentially, by the July 1st holiday, the market had sort of roared back. The S&P, had roared back about a 5 or 6% increase from where it fell off when we initially heard the announcement that, Russia had decided to invade Crimea. And so, history doesn't necessarily guarantee us anything about future performance. But if we just looked at that for a second, it probably smacks of similarity, where maybe we're overreacting a bit right now to how much of an impact this is going to have on our markets here more broadly. U.S. and even in Europe. But I think it's really important to make sure that we understand that we just really have no idea just yet, because we have no idea how many cards Vladimir Putin has left to play.
I appreciate it.
On your best trade ideas right now. Birthday boy, Josh, we're starting with you.
Okay. Malcolm, what's your pick?
Yeah, we're actually really big fans of Amazon, the runt of the litter of the big mega cap tech stocks last year, because the outlook for Amazon, they announced their first share buyback in over a decade last month. And beyond that, we also see the company's recent decision to disclose advertising revenue and detail capital expenditures by category as a prelude that, maybe Andy Jassy will actually begin to break out the numbers on AWS, which some analysts estimate could have an enterprise value of up to $1.5 trillion on its own, right? So for context, Amazon right now, its enterprise value is estimated at $1.6 trillion as an entire company. So if they just unlock the value that AWS has in there, that could spell, a pretty strong year for Amazon shareholders.
All right. 2 names with consumer-facing businesses attached. Thank you, Malcolm Ethridge and Josh Brown.